Hey guys, my name's Joseph Graff. Today we're going to go over my Robinhood and M1 Finance portfolios, and as you all can see, we're already in here in my Robinhood portfolio. So the big news this past week for me is that Chegg released their earnings report, and they actually had a fantastic earnings report, and the stock jumped to about 10 to 15%. So I'll go ahead and show you all that right here. So as you can see right here, the stock price jumped up from around $29 or so, all the way up to around $34, almost $35. So that was a big, exciting piece of news for me this week. I had talked a little bit in the past about how Chegg had dropped down kind of low after their acquisition, and I was a little worried about it, but I decided I would hold on to it for the long term because I like it as a company. And of course, I'm glad that I did that as it jumped up quite a bit. So looking at my Robinhood portfolio, the past day of trading, this past Friday, I was up 0.2%. Over the past week, I was up about 0.4%. Over the past month, I was up about 2.8%. Past 3 months, I'm up about 2.74%. Past year, I'm up a little over 11%. And all time, I'm still up close to my all-time highs. I'm up a little over $1,000 or about 14.5%. So yeah, like I said, very excited about how Chegg did this week. The rest of my stocks were pretty meh. There wasn't really nothing too exciting this week, I would say. I think that was a double negative. But yeah, the stock market performed pretty well this past week. It was up about 0.4%, so pretty happy with that. I'll show you all some of the dividends that I received. Verizon paid me $2.46. Geo Group paid me 96 cents, and the Treasury ETF that I own paid me a little over 50 cents. So still very happy with how this portfolio is going. A couple positions that I would like to add to in the coming months are Visa. I still really love Visa as a company. And also I really like Waste Management as well. Something I am going to try to do over the next few months or so is I want to trim down the number of positions I have. So I like owning ETF that replicates the stock market, like SPY, that just tracks the Standard & Poor's 500. I think that provides a great level of diversity. And then I think after that, I would really like to only own about 10 different stocks, individual stocks, simply because it's just getting too hard to keep up with these 30 positions that I own. You know, I have a ton of these different stocks, and a lot of them I only have one share or so of. Like, to be completely honest with you, I'm not really sure how Square's been doing lately. I don't know if the price it's at right now is a fair value for Square or not. And that's simply because I don't have time to look at and keep track of 30 different stocks. So something I am going to try to do is I'll probably move towards maybe just like a Standard & Poor's 500 fund, maybe a couple other ETFs, like some dividend ETFs. I already own a few of those. Maybe a couple different sector ETFs, I could do a real estate investment trust ETF that just is composed of just real estate investment trusts. But for the most part, I just think it's getting out of hand how many stocks that I own, and it's nice in some ways because it allows me to keep track to some extent, at least the price of these different companies, and look for buying opportunities, see if there's any of these companies that are undervalued and might be a good opportunity to purchase. But at the same time, like I said, it's just too much to handle, and for all I know, some of these stocks could be way overvalued, and I'd have no idea that I should sell them. So that's kind of one of my game plans going forward. In addition to that, I just want to keep adding money mostly to my M1 Finance portfolio. Really what I'm doing now is taking a lot of the dividends that I receive from this Robinhood portfolio and just actually putting them into this M1 Finance portfolios. That's really been what I've been excited about lately. So that being said, we'll go ahead and take a look at my M1 Finance portfolio. So here's my M1 Finance portfolio as we've talked about. Now, I'm almost going to contradict myself here because I own 100 different stocks in my M1 Finance portfolio. So you might say, Joseph, what are you doing? You're just talking about how you can't keep up with all these stocks, and then you go and you have 100 companies that you own in your M1 Finance portfolio. And while that's a very good point, the reason I am okay with holding this many companies is because at this point, when I have 100 different companies, my portfolio is going to track the stock market, and more specifically, it's mostly going to track value stocks, as that's what I bought for the most part. So as I've stated before, the majority of my purchases in this portfolio, the majority of the stocks I own in this portfolio are dividend aristocrats, companies that have paid a dividend and increased that dividend for at least 25 years. The rest are mostly real estate investment trusts and a few other companies that I like kind of sprinkled in there. So with this portfolio, if one company does poorly, it's fine because more than likely there's going to be another company that does well. This portfolio is probably going to track a index of value stocks, large cap value stocks, pretty closely. So that's why I'm willing to, have 100 different positions in this M1 Finance portfolio, but I'm kind of leery about having more than, 15 or 20 in my Robinhood portfolio. So over the past, on this last trading day on Friday, it looks like I was up about 0.1%. Over the past week, I am up, actually down about 0.1%. Over the past month, it looks like I don't know why this is loading so slow today. Oops. Over the past month, I'm up about 4.4%. That's higher than I was expecting. For the quarter, I am up 5.72%, and all time, which is also would be how I'm doing over the past year since I started this portfolio this year, I am up 6.65%. Like I said, not really too sure why this is loading so slow today. Looking at some of my best performing positions, Leggett & Platt has done really well for me. It's up 70%. And that's pretty insane given that I just started this portfolio, I think like 3 or 4 months ago. And so Leggett & Platt must really be killing it. AbbVie has done very well for me, and Apple has done very well for me. Now looking at the bad performers, some of the poorer performers. Cross Timbers Royalty Trust, I think that was my worst performer last time. It's still one of my worst performers. Anheuser-Busch, not doing too well, and Public Storage. So looking at the dividends that I have received over the past week or so, it looks like I actually got quite a few. I got 6 cents from Capitala Finance Corporation, 4 cents from Gain, which is a business development company, 2 cents from Gladstone Land Corporation, 3 cents from LTC Properties, they're a real estate investment trust, 8 cents from AT&T, 21 cents from Geo, they actually own a bunch of private prisons, 6 cents from Verizon, 3 cents from Pentair, 3 cents from Lowe's, and 4 cents from Nucor. So you all probably see that this dividend I received from Geo is a lot bigger than all the other dividends I've received in this portfolio, and that's because Geo is sitting at a very high yield right now. So the private prison industry has kind of come under attack over the last few years. I guess people are worried that they could be, possibly paying off government officials trying to get more people in these prisons. Now that's purely conjecture. I think I read an article suggesting that that could be true. I don't think there's been any proof showing that actually is the case. But like I said, I think that idea is kind of floating out there. And I believe there have been multiple Democratic candidates for the 2020 election who have said that they would end private prisons. So, that being said, because of that information, it has caused the stock price to go down, while the dividend yield has stayed, or the dividend paid out has stayed about the same. So as a result, you end up with a higher yield, and I think they're actually sitting up close to 10% right now. So I just want to talk a little bit about that, but still very happy about the dividends I've received. And let me go back to my portfolio, and I will show you. So all time, I've earned close to $5.50 in dividends. Not a ton of money, but what I do really like is those dividend payments are going up over time. As you all could see, when I showed you all of my dividend payments, it used to be that they were all like 1 cent, 2 cents. And, with this dividend payment from Geo Group, we were at 21 cents. Now, that one's an outlier for the reasons I just discussed. But, I am starting to see like 5 cents, 6 cents. So it's just really cool seeing that they're growing. I'm really enjoying continuing to invest in this portfolio, just adding in, $40, $50 a week where I can. And it's been a lot of fun sharing these videos with you guys. So if you all like this video, please make sure you hit the like button. Please subscribe to the channel. And like I said, I just really want to thank you all for watching. I've had a lot of fun with this. And I'm looking forward to making more videos in the future. So you all take care.